Again, it's great to see you. Laura, let me begin with you. Because they gave this incredibly optimistic view on what they were able to do signing up new subscribers, did it persuade you that now might be a good time to get into Netflix?
It didn't. We think it's too early. They said their ad revenue will not be meaningful in 2023. And more importantly, they took a price increase last year, first quarter, and this year, the form of the price increase they're taking is they're going to basically disconnect any of your subscribers that are out of your home. So they're called those borrowers, and they're going to try to get rid of password sharing, which is a form of price increase. But unfortunately, what that forces consumers to do, like me, who pays $20 because I have kids all over the college, using it, is it forces us to reevaluate and downgrade to the $9 service, right? And then my kids have to subscribe separately. And I think that's really bad for inertia. I think inertia is the reason we have so many linear TV ecosystem subscribers. That's a really powerful motivator. So they shouldn't be asking me to reevaluate downgrading my tier, because I might just turn it off completely.
It might be inertia, and it also might just be that once a year there's a program on traditional television that the family wants to watch, and then what are you supposed to do? But I digress. Mark, you and Ryan Reynolds picked Netflix for your CNBC stock draft. You're winning because of it. Congratulations. If the draft were held today, would you still pick Netflix?
Well, certainly the stock price a year ago, it was a lot more attractive than it is now. But I think what you're seeing is Netflix traditionally has led in the media business. Like a lot of the innovations you've seen in streaming have come from Netflix. And I think now you're seeing with the management change they're making, they're gearing up to lead some more. And so, yeah, I would invest in the management team at Netflix for them to navigate the ad business, for them to navigate the password sharing, and to essentially generate more growth. And so I think that any investor looking at Netflix now, it's a good time. Given
the ad landscape right now, where we're seeing so many companies worried about what's coming down the pike, and in fact, Laura and I were talking earlier about that happening with Google and what's happening with YouTube and the search ads and all of that. Is it now a good time for Netflix to be launching the ad part of this business?
Well, I think they have. Is that for me? Or is that for...
Yeah. Mark, I want you to answer that.
Yeah, I think they have no choice. I mean, in terms of is it the best time? In some ways, it's not. And the reason for that is you have a lot of supply coming into the market from Netflix, from Disney Plus, but you're seeing demand pulled back on the behalf of especially large brand advertisers. So those big brand advertisers responding to macroeconomic conditions are just generally definitely not increasing their spend, and they, in a lot of cases, are decreasing it. So that classically sets up for a price war, a decrease in prices. So it's not an ideal time, but I think these advertisers are really excited about Netflix at the right price. And so Netflix will still navigate that.